All right, good afternoon, everyone, and welcome to today's technical briefing. We're calling it a technical briefing on recapturing development costs under Section 41. And our focus for today is going to be on three industries. These are fairly well integrated, but also separate. And these are going to be AI, artificial intelligence, robotics, and IoT or Internet of Things. We are so thrilled to have so many innovators and finance leaders joining us today on February the 5th. So, as the title suggests, we're moving past the buzzwords to focus on the practicalities of recapturing development costs under Section 41, i.e., the US R&D tax credit. Whether you are working in artificial intelligence, Internet of Things, or robotics, today is about understanding the tangible financial benefits available for your technical advancements. My name is Omar. I'm a senior consultant at Leighton US, and I have a double background in industrial engineering and computer science with a focus on cybersecurity. Today, I will be your moderator. This session is brought to you by Leighton US, where our job and mission is to help you empower your future by maximizing the resources available for your R&D efforts. Before I introduce our core speakers, I have a few quick notes to cover. First, please use the chat or Q&A box to submit questions throughout the webinar. We're going to have a detailed Q&A session, and we look forward to seeing your questions and answering them today. We will also be providing a copy of these slides as well as the recording of the session once the event is wrapped up. Please keep an eye out for that on LinkedIn or via email. Our marketing team will be handling that. Last but not least, just for housekeeping, if you're having any trouble seeing the slides or hearing us, please let us know in the chat right now. All right, no messages. I'm going to assume everyone is happy. All right, great. So let's meet the team who will be guiding us through today's briefing. We've brought together a group that understands both the how and the why of the US R&D tax credit and the tax code in general. We'll start with Farouk. Farouk is our technical expert. Farouk, please go ahead and introduce yourself.
Thank you, Omar, and hi, everyone. Welcome to today's webinar. My name is Farouk. I am a technical consultant at Leighton. My background is in mechatronics and robotics, and before moving into consulting, I worked much closer to the engineering side, which is why my role here is really about bridging the gap between what engineers actually do and how that could work and translate into the R&D tax credit. And so today, my goal will be to walk you through how the IRS looks at R&D from a technical standpoint, not just from a market and buzzword perspective, and to give you a practical way to think about how your projects might qualify and how we could look at your work from an R&D lens. And I'll hand it back to Omar briefly, and then I'll walk you through the technical portion of the session.
Thank you, Farouk. And to help bridge the gap between the technical projects and the actual tax filing process, we have Teva. Teva is a senior advanced computing cluster lead at Leighton US, who also happens to be an expert when it comes to financials. I'll hand the microphone to Teva to introduce himself.
Thank you, Amal. Thank you, everyone, for joining the session. As the name says, my name is Teva. I am a financial tax expert here at Leighton. I've been doing those R&D studies for the past 4 to 5 years, actually. I am also the software lead at Leighton and also working on the back end on a new product that we're going to be releasing related to R&D. So be on the lookout for that release pretty soon. But that, without further say, I'll hand it back to Amal. But if you have any questions on the financial end, I'll be happy to answer those questions.
Awesome. Thank you so much, Teva. All right, so between the three of us, we will cover everything from the engineering nuances of AI, robotics, Internet of Things, and financial requirements for Section 41, and kind of help you build a nexus and bridge the gap between the technical language, the engineering, the hard science, and the financials, the documentation, and the filing process. So to give you an idea about how we're going to spend our time today, specifically, we have broken the session into 4 key areas. Our goal is to move from the broad rules to the technical reality of your daily work. So we're going to start with an analysis of eligible activities using real-world examples. Things like data pipeline engineering, firmware development, prototype development, etc. This is where we bridge the gap between engineering and tax eligibility and kind of help translate the hard science language into tax speak, if you will. Once we're done with that, we're going to go over section 41, focusing on changes specific to 2026. We will explain how these tax credits currently apply to the heavy lifting you're doing in software, hardware, and system integration for artificial intelligence, robotics, and Internet of Things. Third, Farouk will walk us on how to avoid the underclaim trap. Many companies only claim a fraction of what they're owed because they don't realize that certain phases of development are actually eligible. And last but not least, we will open the floor for a live Q&A session. I encourage you to start dropping your specific technical or financial questions in the chat throughout the presentation so that we can address them later. So before I hand it to our key speakers, a quick introduction on us. Who are we basically? We're Leighton US. Leighton is a global leader in innovation funding. We were founded in 1997. We have 3,000 plus employees in 16 countries, distributed across the United States, Europe, and Africa. At Leighton US, we specialize in several products, but our bread and butter is Section 41 or the US R&D Tax Credit. Our unique edge is that we don't just have financial people or CPAs. We also have engineers and technical experts like Farouk on staff. This matters because we understand the how of your artificial intelligence and robotics projects, not just the steps required to file for the credit. And this allows us to maximize your return on investment. Our goal is to take the documentation burden off your plate so that you can focus on innovation. And last but not least, we focus on building defensible, high-value claims. In simple terms, our studies are audit ready. With that roadmap in place and with our introduction established, let's jump straight into our first topic. I'll hand it over to Farouk to walk us through eligible activities in section 41. Farouk, over to you.
Thank you, Omar. So let's jump in with the four-part test first. So what is the four-part test? At the core of every R&D tax credit claim is what's called the four-part test. This is a framework that the IRS uses to decide whether your work qualifies or not, regardless of what industry you're in. So I'll walk you through these quickly and apply them to real engineering work later. So the first is what we call a permitted purpose. This simply means that you're developing or improving a new product, a new process, software, technique, or system, or if you're taking an existing one and improving upon it in terms of the functionality that it has. So this improvement might be with regards to performance, when it comes to reliability, for example, when it comes to scalability, and we know that for software companies, scalability is very important. So that is an improvement that we could look into. And then accuracy. So if you have an AI model, accuracy we know is very important. So these projects or these activities do not have to be something revolutionary or state of the art. So that is regarding the permitted purpose. Second would be technological in nature. So basically, the activities that you're carrying out must be rooted in principles of hard science and engineering, things like computer science, mechanical or electrical engineering works, systems design, systems engineering, etc. The third part of the test is what is called elimination of uncertainty. So at the start of your projects, you didn't know how to make it work, if it will work at all, which design or process will work best, which approach. So a good way to look into to look at the elimination of uncertainty part of the test is that if you knew the answer on day one, then it wouldn't count. But if you had to go through several iterations, then we can count it as a proper technical challenge that qualifies. And this brings us to the fourth part of the test, which is process experimentation. So process experimentation, kind of similar to the scientific method. So this is where engineers can recognize their work. So if you're evaluating multiple alternatives / hypotheses through iteration, prototyping, simulation, testing, trial and error, then it is a valid process experimentation. We can also look into modeling, simulation, to basically overcome those design challenges, those technical challenges. And you try things that failed. This is typical with engineering projects. You try different solutions. Some of them are creative, some of them are straightforward. Maybe you spend all-nighters. Yeah, we're familiar with that. So a simple rule of thumb is that if your engineers had to experiment to solve it, it is usually worth to evaluate for R&D tax credit purposes. Now we move on to another part that we often look at, or that we often see in our line of work, is that a misconception that companies have, which is that a lot of leaders think that R&D only happens in dedicated labs, sterile labs with lab coats, etc., where researchers have blue sky research, whiteboards, breakthrough inventions that you read on the internet. But in reality, no. R&D, in the eyes of the RS, can happen wherever teams are solving technical uncertainty through engineering, through design, through testing and iteration, and very often through normal product development cycles. So what actually matters for the RS is that you didn't know the solution at the start, and your engineers had to evaluate several alternatives, and that the outcome in the beginning was uncertain, or even in the middle, even if the work itself was practical. So R&D is not about how impressive the work sounds in a pitch deck, but it's about whether engineering judgment was applied during the project and experimentation was required to overcome your design challenges. Another thing that we often see is that companies often underestimate or underclaim the credit. So this is where most companies leave value on the table when it comes to the R&D tax credit. So we see often that teams stop tracking qualifying work once their feature works on a rudimentary prototype, or their project meets basic baseline requirements. So from an engineering standpoint, that feels like the end in some cases, but from an R&D perspective, it usually isn't. And so what often gets missed is that performance tuning optimization after the fact, or reliability improvements, reducing latency, improving scalability. If you're doing hardware software integration and testing in real world or edge environment, maybe putting your hardware on a test bench, that often is an area where we could look into R&D tax credit. And the opportunity that this offers is that these post-prototype phases often represent a large portion of total qualifying R&D costs, and they're frequently overlooked. So in other words, or another really important point is that for AI, robotics, and IoT, if you had failed experiments, abandoned designs, or even your product was an outright failure, it does not matter. They're expected from an engineering standpoint, and those efforts, even if they were not fruitful at the end, are fully eligible for the credit. The credit tries to reward the attempt to resolve technical uncertainty and not just the final solution. With that out of the way, we're going to talk about robotics, some industry examples, not just in robotics, but also in AI and IoT. So to make this concrete, for robotics teams and mechatronics teams, qualifying work often looks like this. You are working on a new software for robot kinematics, or motion planning for a mobile robot or for a robotic arm. And you're using frameworks and tools like ROS, Gazebo, Isaac Sam, etc. Another one is that if you're integrating sensors, if you're working on sensor fusion for reliable state estimation, that is a good example that we often see. Tuning control parameters after you've built a prototype and validating behavior in simulation before deploying to the hardware, or when deploying to the hardware as well. That could qualify as well. And last but not least is on the mechanical side or the hardware side. So often robotics companies, we see them overlooking this. So if you're designing custom components like mounts, brackets, and effectors with specific requirements to meet payload or reach specifications, then that's another potentially qualifying area. More so because in these mechanical iterations, you often run through consumables, supplies for prototyping. So supplies also count towards the R&D tax credit. So this is why this is a very important area to look at. And as you can see, none of this is moonshot research, but it can involve real technical uncertainty. Now, we move to another important industry nowadays, which is AI and machine learning. So in this industry, we often see eligibility in areas such as implementation of new features or new feature pipelines to ensure consistency between training and production. For example, building the backend services to AI models or to serve through REST or APIs, for example, or you're building servers, etc. Then that's also another qualifying area. And then another one is reduction in inference latency. So obviously, when your model is deployed and you need to do inference in edge computing or real-time deployments, then that's another area where there can be significant challenges, and we should look into R&D tax credit in this case. And again, these are practical engineering problems, but they often require experimentation to solve. The last industry that we're going to touch upon today is Internet of Things. And so for IoT teams, development of device firmware, backend services as well. We can see some overlap with AI, but development of backend services is very important. Or maybe ensuring that the consistency of over-the-air updates. Also, another one is design of ingestion systems to handle high-volume sensor data and to normalize it for analytics, for example, or to clean it up. And then, last but not least, implementation of fault detection and alerts when deployed devices go offline or they're reporting anomalous readings in certain conditions. And so these challenges, as you can see, are not really state of the art, but they usually involve a mix of software and hardware design, maybe some networking and systems engineering, systems integration, which is exactly where R&D eligibility often lives. Okay, so the next thing we're going to touch upon is the layer-on process and our advantage. So how do we help teams navigate all of this and without adding friction, and why are we the best option? So in our approach, we use dual expert teams. So basically, we pair engineers with dedicated tax professionals and financial experts, so that you're not forced to translate your engineering work into tax language. The second step, once we start the process, is that we conduct an in-depth interview with our engineers, with our financial experts, to identify qualifying activities across software, hardware, system integration, and not just the obvious R&D initiatives that you might be involved in. Then we do financial mapping and cost capture. So we try to align the activities that we identified to payroll and to contractors, to supplies, to cloud computing as well. We know that a lot of software companies incur a lot of cloud computing costs. So we try to map those costs to make sure that they are properly captured and supported. We then move to documentation and substantiation. So after this process is done, we have enough information to deliver to you a clear deliverables package with a structured technical report that connects your engineering work and your engineering reality into IRS requirements, and is designed to be robust. It is designed to be audit defensible in the case of an audit, and it's basically going to give you the comfort that my claim is properly substantiated with the proper activities, the proper costs. I am not overclaiming, I am not underclaiming, etc. So the outcome of this is that you have an optimized and maximized for value claim that is not disruptive to your engineering teams. All right, so this was it regarding the latent process, and now I'm going to hand it to Deva, who will give you some recent updates, exciting updates about how the R&D tax credit will work in the future. And yeah, Deva, back to you.
Thank you, Farouk. I want to take a little moment. I know this was a lot of technical information, so if you have any questions, again, they are all in the chat. And I'll go over the financial portion of this discussion. So what's not written on the slide is, I just want to remind this, the R&D credit is here to offset income tax liability if you're profitable, and for small businesses to offset payroll taxes if you're, for example, not profitable. That being said, to give you a bit of context on the changes that happened last year, with the GDCA tax law, it happened that you had to amortize your R&D costs over 5 years. This change has been revoked, and essentially it is important to keep in mind that since this one beautiful bill that passed last year in July 4th, 2025, there are some changes to pay attention to. So for small businesses, those companies, so small businesses, so what is a small business? Essentially making less than 31 million of gross receipt. They are able to reverse capitalization for 2022, 2023, and 2024 tax years by amending those years prior to July 6, 2026. So that deadline is key, it's important, and we should be, every tax professional should have this date in mind, essentially. So small businesses, as I just said, can amend those returns to reverse capitalization and make an election, to deduct the cost under the section 174A, which essentially requires a statement with the amended returns. For all, or just decide not amend, there are different options. So one, on your 2025 filing, which will happen pretty soon if you're planning on filing on time with March 15 or April 15 deadlines, you are able to deduct all remaining and amortized domestic costs. The reason why I'm mentioning domestic costs is because per the law, all foreign R&D expenses still need to be amortized over 15 years. So for all R&D, domestic R&D costs, they can unamortize that cost in 1 year, or do this over 2 years. So the 2-year deduction option allows you to essentially ratably unamortize costs over 2025 and 2026 tax year. As I just mentioned, there is a difference between foreign R&D and domestic R&D, which is not essentially categorized the same way under that section. That being said, that there are also new changes that happen in 2025 tax year, Form 6765, and more to come in 2026 as well. I'll start with the first one. So on Tax Form 2024 and 2025, there's a new section that the IRS added to that form, which essentially requires more information. So they want the tax professionals to report the number of business components. So the main changes, innovation changes that happen, you do need to mention the amount of business components that are happening within that tax year. Secondly, we do need to highlight the officers' wages included in those QREs. Officers' wages are the owners of the company, and we do need to highlight those because it is important in the eyes of the IRS to know the proportion of what the owner is essentially generating from those QRE. And also, they're asking for more acquisition, disposition changes as part of the section E. Going to the new changes, section F, that will be required for businesses making under for businesses essentially in 2026. They are asking a QRE summary. So this requires a detailed breakdown of QREs by wage, supplies, contract research, and so on. Section G is a lot more focus on granular technical information. They need to see the project level reporting, including the names, the description of the business component. They want to know if it's a product, they want to know if it's a process, if it's a software, if it's a formula, all of those information that you need to have with a technical team of the client that is claiming this R&D study. That being said, this is mandatory for 2026, which brings me to the point that it's very important for the person preparing those taxes to know the internal qualification of the internal profit of those projects, and this is what I have on the financial end. Let me check if there's any question that we can answer in the meantime.
Yeah, I saw quite a few good questions.
Yeah. Jay, why can I claim with my CPA? So what I just mentioned, so the fact that the IRS now requires a lot more scrutiny on those claims means that a tax accountant is an expert in taxes, in accounting. They probably don't have the understanding of what really qualifies under, for example, an AI project, or they can understand it, but they're probably not going to be able to see the full scope and include all costs under that business component that was identified by, for example, Omar or Farouk that are here on that call. So that's, for example, one of the big reasons why having a specified expert on working on your claim is important. Is like it will allow you to either one, capture more information, and also have a lot more information on this reporting on Form 67, 65 going forward.
Awesome. Thank you, Teva. All right, so we have some more questions hitting our Q&A session. So I'll hand it accordingly. So the second one is from Jay as well. Thank you so much, Jay, for being super active. And this one will go to Farouk. So can we claim a project that has failed?
Absolutely, yeah. The R&D tax credit does not really discriminate between projects that succeeded or projects that failed. There is nothing that says that your project must be a success for you to claim it for the R&D tax credit. Essentially, if your team attempted to solve a technical uncertainty through a process of experimentation and ultimately you failed, then you can still claim for the R&D tax credit. Yeah. Next question, right. Omar, please.
Yes, we have another one from Jay as well. Will lack of documentation be a problem? My team hasn't been documenting R&D, so I'll jump in, answer this one super quick. Short answer is no, it will not be a problem. We have been doing this for over 20 years. We've been working with companies that have not been documenting their R&D efforts. So we are experts at extracting that information, maximizing your return while minimizing your time involvement. So please follow up with us, book your call. We'll make this very easy for you. Short answer, no, this will not be an issue. Third and fourth questions, and these are more related to the slide deck, the presentation, the event. Yes to all of them. We will share a recording of the event. We will share the slide deck. And if you have any questions, any specific information requests, you're free to follow up with us. And I think that wraps it up for our Q&A session.
There is a last question, on the about government contracts and grants. So, and that's another good question. So grants, a grant is money essentially given from the government to a company to deep dive into a high risk project. It's money from the government. So unfortunately, you're not able to include that cost. So grant funded projects are not per se cannot be included in this study because qualified exactly due to the fact that it's already money given by the government. However, government contracts are seen a different way because they are paying a company to, I mean, there are, it's essentially like a business relation, and we do have tax experts that can review those contracts, and we can include some of the government contracts in an R&D study. It happens, it is feasible. And also to go back to another question about, do they need technical substantiation? Time tracking also is good to have, but we have a way to go around. If there's no time tracking available for companies, then we can still capture those costs if needed.
Awesome. Thank you, Teva. Missed that one. My bad there. All right. So, ladies and gentlemen, this concludes our technical walkthrough for today. As we have seen, the gap between doing innovation and successfully claiming it under Section 41 can be wide, and this is where Leighton US comes in. We invite you to reach out to us, Farouk, me, or Teva, for a direct consultation. We won't just look at the numbers, we'll actually look at your code, your builds, architecture, prototypes, and build a defensible claim that maximizes your return. Whether you want a second look at a previous filing or you're starting fresh, we're here to take the entire process off your plate while maximizing your return. On behalf of the whole team, thank you so much for the incredible work you're doing to move the industry forward. We look forward to helping you recapture those costs so that you can reinvest in what matters most, your next breakthrough. Thank you so much, ladies and gentlemen, and we really look forward to hearing back from you.
Bye, everyone.